In today's video, my goal is to try to explain why I do believe that NIO will increase their vehicle sales quite substantially in Q2 and in Q3 of this year, but how, despite increase of vehicle sales, they will still make quite gigantic net losses, to be honest. But at least in terms of vehicle deliveries, I believe that it's gonna look much better. I do believe that Q1 was always going to be the worst, especially since we know that another brand, we have now Neo Classic, we have Onvo, and now we have also Firefly, the third sub-brand coming on. And combined, when everyone is selling, I believe that Neo most likely will have a single month this year almost pushing 40 to 45,000 deliveries at some point this year. And I do believe that I wouldn't be surprised if they average 25,000, almost 30,000 for this quarter Q2. Now, April could be slightly lower. I believe April could be between 20 to 25,000 deliveries, which will be much better than especially January and February combined, which they had almost 26,000 deliveries or so. And we just got also the delivery numbers for this past quarter and also this last month in March. In March they had 15,039 deliveries, and in the past Q1 they had 42,000 deliveries, which is substantially lesser than the 70 or so thousand, the 72,689 in the previous quarter Q4. So they essentially went down by almost 30,000 deliveries over a single quarter. But again, it's realistic that the deliveries in Q1 of this year will always have been quite low. The Chinese New Year happened as usual, in end of January, early February. We know that again NIO is doing the new model year facelift models, so to say. We also know that on the positive side, NIO ET9 is looking to be starting, actually a couple of days ago on March 29 they started to sell that one. This is not gonna be a high volume car, but it's gonna be a high margin car. But it also depends, despite the gross margin being high, maybe they need to sell this in enough quantities to make money, even if let's say, even they are like a high, it's a $100,000 car essentially. It's the same scenario as Tesla had 10-12 years ago with the Model S. They were selling them at high prices, but if they couldn't manage to sell them in enough quantities, then they wouldn't make any profit on it. So even if the price per car is much higher than the traditional NIO cars, or especially Onvo, and even more so Firefly, which will cost roughly $20,000 or so. And speaking of Firefly, it will be launching on April the 19th, according to the latest rumors. So again, combining all of this, I believe, to be fair, I have been quite negative in terms of Onvo deliveries, the second sub-brand of NIO. They just managed to deliver 5,000 cars, almost 4,820 in March. Remember that their target was 16 or 20,000 for March, their own target from like end of 2024. So they for sure fell far below their own threshold, their own targets. But all that being said, I'm not blind to this fact that I do believe that Onvo will ramp up in delivery numbers quite substantially. I wouldn't be surprised if they do 10,000. But no matter how much I look at it, and despite me being positive in terms of NIO monthly deliveries and quarterly deliveries, if you go up here, you can see that I'm projecting somewhere around 80,000 deliveries for this combined of April, May and June, and probably pushing 90,000 in the Q3. So numbers are going up. I cannot see at all that NIO will deliver below 55,000 for this up and coming quarter. So they will have one of the best ever quarters, bar, let's say, Q4 of last year, but they could potentially even beat that in Q2. So I'm not coming from the point of view that the demand is so low that they will sell only like 10-15,000 cars per month. I don't think that's realistic. I think just the low sales numbers in the first 3 months of this year has been more to do with the general market, although you could say that Xpeng has been doing much better. But again, it's different price class, so it's not only apples to apples comparison. But no matter how you look at it in terms of volume deliveries and in terms of like some of the stuff going like in NIO's favor, for example, the lithium carbonate price, which makes the battery prices going down, and this also makes the gross margin per car sold going up. But this is applying for every single manufacturer, so this is not only for NIO. Here also I can show you another chart here that is very important. The white part of the graph is cost of other sales. The blue is the actual other sales, so in terms of revenue. And then we see that the green is the delta. So as long as it's below zero, it means that the other sales is losing money. And if it goes above zero, they're making money. And I was projecting to have that kind of, break even point by end of last year, early this year, and it happened in Q4. But probably in Q1 it's gonna again fall below this zero threshold due to the fact that the volume delivery is gonna be quite low. But for the rest of Q2 and Q3 and Q4 of this year, I do expect them to go up, maybe even make double digit, like 10-15 million in profit in at least in the delta between these two indicators. So there are some positive stuff. I mean, they are starting to see some reward for their scale. And although they are not, competing with Xpeng in terms of numbers, I mean, they're still scaling up. And let's be honest about this, NIO has increased their volumes. Like, again, with the projections of 450,000 for end of this year. Now, I understand that it looks like a far stretched goal because they delivered just something like 42,000. So essentially they need to deliver somewhere around 400,000 cars in 3 quarters. That's 140,000 cars per quarter from now on. It's gonna be very difficult because although I expect Q2 to be fairly good, I don't expect it to be like 120,000 good, right? In best case scenario, maybe they do 90,000. Maybe like if everything hits, if the classical NIO starts to do sell well, Envoy is hitting 20,000 a month, and Firefly hitting 10,000, yeah, sure, they can reach that. So again, it's not unrealistic, but I wouldn't bet on it right now. But in any case, they are still, on at least I would say 300,000 to 350 is much more realistic for the moment with the data we have now. And that's like well ahead of even 2022 at 120,000 deliveries. So they are increasing their sales. It's just the cash position is taking a hit, especially since sadly the last quarter, they made a huge giant like net loss of $1 billion or so. Here you can see on row 30 for Q4 of last year, and the cash position was at the time somewhere around 5.7 billion US dollar. You can see on row 38. So they had somewhat of a lot of cash. They also now diluted to, I think, the tune of 6.5 or 5.5% or so of the combined shares. So they took in around 450 to 550 million. That's essentially half a quarter's burn rate at this current stage. So yeah, it's not as bad as you might have believed in terms of the actual deliveries, because I think the most negative views on NIO are maybe a little bit unfair when you look at in terms of like they try to say that, oh, the demand is completely dead and no one is gonna buy NIO cars, and I don't think so. I think the numbers that we saw in Q1 of this year are not representative of what this company is gonna be able to do in the future, especially in the next quarter. I do think they will have much stronger Q2 than Q1, the same way that they went from 30,000 last year to 57,000 last year. They could easily go from 42,000 to like 80,000 this year. It's easily possible, especially with Envo as well as Firefly. But the bottom line for me is that even if you scale that, even they start to gain some money and gain some margins and maybe turn positive in the other sales, at the end of the day the vehicle margin is so low due to the fact that they carry the load of the battery swap systems. And speaking of the battery swap system, again, look at this. I'm sorry to say, they are now at 3,240 stations. And I know some of you guys always say, it's gonna start to be a money printing machine at some point in the future, but they cannot afford this right now. This costs too much, and the utilization is well below. I mean, the latest Gen 4 swap stations can handle like 480 swaps a day. Granted that not that's not 20 or 24 swaps per hour, because some hours, like after people finish their work, is gonna be higher load, and 10 in the afternoon is gonna probably much less demand on those, so it's uneven demand. But even at the peaks of even if they like they're averaging 30 swaps per station per day, right? Let's say a third of them comes in a single hour. That's 10 swaps per hour in the most busy swap stations in a single hour. Again, it's not realistic to say that, if they do on average 30 swaps per station, which means that on average probably the best they can get in a single hour is 4 to 5 swaps per hour in the most busy hour of the day, right? So they are nowhere near the limits of their current battery swap infrastructure. So that there is no point of building this much of swaps infrastructure ahead of time, especially in a company that cannot afford it. It would be a completely different story if they weren't burning $1 billion a quarter, or even $500 million a quarter, and then they had like 10, 15, 20 billion in cash on hand. But now they have like, what, 1 years of essentially at this kind of burn rate. Then they have to dilute the shareholders again. But every time they do that, they kill the stock price, and the current, currently the market cap sits at below $8 billion. So they cannot win this race. They need to start to cut costs now. And as I showed you, again, I'll show you again in my models, they will not make it if they continue at this rate. They cannot afford to do it. So even in my models, like Q1 is already lost in terms of, the metrics. The revenue is going to tank. It's going to be almost $1 billion less than Q4. So they're going to make a ton of loss again, probably most likely in Q1. Then looking at Q2, and here I'm assuming 80,000 deliveries, so essentially 2x of Q1's, which is, you cannot call me negative for that, right? They're going to have an all-time high according to my models. I'm hoping for that, which means that 25,000 or so deliveries a month. That would still, according to my models, unless they see a huge increase in gross margin, which is hugely unrealistic, since a lot of this, 80,000 is not going to be from ET9, the expensive car, or even the classic Neo brand. If they're going to succeed in delivering 80,000 deliveries, they're going to need to sell a lot of Onvo and a lot of Firefly. And that's going to cut down the average sales price. And I'm probably optimistic going with 33,000, because that's even like going up in terms of average sales price. So it's not, most likely it's going to be even less than this. So no matter how you look at it, it's very difficult for them to increase the gross margin based on 80,000 sales. And with the current cost structure and all the capital expenditure that they have, I don't see them making less than 600-700 million net loss. That's still very bad. And even if you scale it to heck, let's say you increase the average sales price in Q3, for some reason, the demand goes up and they start suddenly to increase the price, despite Onvo and Firefly increasing in volume. Even in that scenario, they would still make $500 million a loss. So even like they sell 100,000 cars, which is great. So again, don't fall for the line of, volume and vehicle delivery numbers only. You can sell a trillion, quadrillion cars, right? If you don't make more money than it costs you to sell them, doesn't matter if you make a universe numbers of car. Like, it doesn't matter. At the end of the day, they need to make money. And in a proper managed company, you would see that with scale, they would start to make money. And I'm sorry to say, currently with the data we have on our hands, I don't want to say that. I don't want to be negative. Trust me. If anyone here would love to see Neo stock goes up, it's me. I've lost probably, I'm honest with you, I've lost like 2 yearly salaries on Neo. So let it be out there. Like, I'm not joking. Like, I truly would like them. And again, I think the design of the car is by far the best one of the Chinese electric vehicles. I think they are much nicer looking than Xpeng by far. So I'm not coming here from a negative perspective. It's just I have to at some point accept reality. And the reality is that the CEO has lost control. So anyways, thanks you for your time. Please like and subscribe. And I would love to hear your opinion on this, and see you in the next one.